All right, y'all, how's it going? I promised to do this video like 2 weeks ago, and I'm finally getting around to doing it. Done dicking around. You know how it goes. Sometimes you get busy doing shit. Anyway, as promised, here we go. So I want to go over reading, analyzing, and interpreting the SPX Gamma Exposure on the day. Okay, so I've been doing these. I've been day trading for a long time. I've been trading SPX 0 GTEs for a long time, and I've been doing my my infamous iron fly strategy for a good 5 years now. And honestly, recently, it wasn't until maybe 2 years ago that I kind of added this to my strategy or to my repertoire, to my analysis. So, not everything is 100% based on this, but I will say this does help guide my decision making now. And, it adds a little bit of structure to it, right? For all those engineer types out there who want everything to be, structured and analytical and consistent and, follow some sort of a repeatable rubric. This is it, right? So, the other thing is this kind of helps confirm where I think we're going, right? Where are we going to end up today? Where are we going to end up chopping around today? This helps big time, okay? So this is a good tool to add to the tool belt, okay? So I use GexBot for SPX Gamma Exposure on the day. There's a lot of different services out there. You can use Spot Gamma is a great one. There's a handful of other ones that I'm not super familiar with, so I won't really mention any of those, but Spot Gamma is a good one, and then GexBot, of course. So just some things I want to point out on here. So here on the top left, just a little ledger here, so the pink is the Gex volume, the red is the OI, the green lines will be your major gamma levels, so your major positive gamma, your major negative gamma, basically like your call and put walls, essentially. And then you have your zero gamma, which is like that yellowish orange line. And then these little dots represent where the volume was previously, 1 minute ago, 5 minutes ago, 10, 15, 30 minutes ago, okay? And here you have vertically all the different strikes, okay? And then on the bottom, you have the amount of gamma exposure in billions, okay? And then, so this is the open here. So also, I want to mention down here too on the bottom right, just so you have it in writing also, you have the zero gamma marked, the major positive gamma and major negative gamma at 60, 80, 60, 40, okay? This is the opening Gex, basically. So not often is it really helpful right at the open. But, some things to make note of is the open interest, right? So this big red line here at 6,100, I don't have any kind of cursor, so I can't point it, but you see the biggest line on the screen is that horizontal red line at 6,100, okay? That's where most of the OI is on the day, okay? And then you look above the opening price, which was about 67. There's quite a bit of interest at 60.75 and quite a bit down below at 60.55. And then you can see the green line there at 60.40. That's your put wall, basically. And the green line at 60.80, that's your call wall, basically. And then the bluish line, that's where price is currently. And then this yellowish orange line in between 60.60 and 60.50, that's your zero gamma level, okay? So that's kind of like what we're looking at right from the open, okay? So let's go to the next slide. This is the price or the gamma exposure at 940, okay? So one of the things we're looking for here is, you can see the dots growing above and below and the pink lines, okay? this is where your volume is starting to come in on your gamma exposure, okay? This is new volume, okay? So right from the get, you can see that there's more interest above at 60.80 and 60.85, okay? Over 2 billion in exposure 10 minutes into the open, okay? And price is currently at 60.69, okay? So that's one of the things you definitely want to look for, is where is the interest at and where is it growing, right? So if you start seeing a ton of pink bars coming in up top and 60.80, 60.85, 60.90, 6100 even, you're going to want to have a little bit more of a bullish bias, okay? Because this is the stuff that drives the price movement of the SPX, okay? These large volumes of calls coming in are going to influence the price of SPX. A lot of calls coming in, there's going to be buying pressure, right? These market makers are going to be hedging by getting long as price comes up, okay? And same thing on the downside. If there's a bunch of interest coming in down below, then they're going to be shorting to hedge themselves as price comes down, okay? So the downside will be more of a magnet if you start to see a ton of pink bars building down below, okay? So here we can see it again 10 minutes later. So a little bit more interest at 60.50, right? Just below 4 billion, but we're still a little bit higher on the upside on the 60.75 and 60.80 strikes, above 4 billion in exposure, right? So, 20 minutes into the open, I'm leaning more bullish still, okay? Right from the open, my analysis told me I want to lean for like 60.75, 60.85 on the day, okay? I ended up going 60.75 today, and this gamma exposure is just kind of confirming my assumption on the day, okay? It's confirming my other technical analysis, my other analysis of where I think SPX might chop today, okay? So here we are at 10 a.m. Now we've grown even more significantly, right? So now, and at this point, I was already up almost $200 on the day per lot on the 60.75 flies. So I had already trimmed at this point. But this one gives me confidence to hold it a little bit longer, or maybe even roll it up higher, okay? But no need, because I'm at 60.75, and most of the interest is at 60.80. And you can actually see. So here's another thing to point out. You can see the dots to the left of that pink line. That means volume was there, about 5 minutes ago. So they're closing those strikes out, right? So the bulls or the bears are capitulating a little bit and closing their puts out. That puts further pressure to the upside on SPX price, okay? So when you see, the pink line shrinking down below and the pink lines growing up above, that gives you a bullish bias, and it's going to push price upwards, okay? So make note of that, okay? Here we are at 10:30. You're seeing even more pink dots showing up to the left of these bars, but we do have now $8 billion in exposure of the 60/60s, but a lot more above, okay? So you've got $8 billion in exposure from 60/70 all the way up to 60.85. So still a little bit more of a bullish bias on the day. 11 o'clock, similar stuff going on here. Looks like maybe there's a little bit more interest on the downside, but still nothing crazy to make note of at this time. You can start to see, so you can see more dots embedded in the lower ones. You can start to see on the upside, not a lot of dots in there, so they're not adding to it. So these are kind of like, as I like to say, stale calls, okay? So there's not much right now that's going to drive it up further unless, aggressive buyers step in on the ES or something like that. There's a lot of different factors here at play, okay? But, sometimes when you see these stale levels, sometimes, you should be a little cautious, because, that's just an opportunity for them to start closing those strikes out. And if they start closing them out, that will put downside pressure on, okay? But for the most part, we're in a massive gamma positive environment. So price is pretty stable, and it's going to stay in a very tight controlled range. Okay. Here we are at 11:30. So a little bit more exposure down below. Again, still a lot more up above though. Okay. In fact, now there's 8 billion in exposure on the 6095s, and 6100 has been getting some interest as well. Okay. 12 noon. So some of these puts are being closed. That's a good sign for the bulls. You've got almost 8 billion in exposure across 4 different strikes for SPX from 6050 to 6065, but you've still got a lot more up top. Like I said, some interest coming in on that 6100 strike. 1230, really starting to shrink down here on strikes below 6050. Still about 8 billion in exposure on the same strikes on the downside. Now you can see even more. So we're getting close to 8 billion in exposure on 6100s. Okay. So it wouldn't surprise me today if we ended up getting up closer to 6100. So now we're shrinking even more. Now there's only 2 strikes that have 8 billion in exposure on the downside, 6060 and 6065. Okay. So they're shrinking even more on the downside, more pressure on the upside for sure. But I also wouldn't be surprised to chop around 60-80 for the rest of the day. Okay, and that's pretty much it. So, just to kind of summarize, in the most simplest of terms, you just want to look and see where the most interest is on this chart. Okay, where are those big red lines at? So that can be an area of interest as well. And then those pink bars, you want to see where they're growing, where they're shrinking, right? Because that can oftentimes be a magnet for price. Price will be drawn to that level because of the way that market makers and dealers are positioning themselves to hedge themselves. Okay. So pretty simple stuff, honestly. If you have any questions, ask me more in the Discord chat. But it's pretty simple. I would definitely recommend you becoming more familiar with this and getting used to looking at this and analyzing it, because it is a good tool to add to your tool belt when placing trades intraday. Okay, this is just for intraday. This does not benefit you in any way on a swing position into the next day. Not helpful at all. Okay, so this is strictly for a 0 DTE type setup. Okay, hope this was helpful. Again, if you guys have any questions,